Thanks for taking the time out to hear a little bit about silver and the opportunity that I think that it offers. My talk is going to be about how we're facing a new investment landscape and how silver offers you a generational opportunity. First thing I just wanted to point out is that I've just published a book called The Great Silver Bull that's available on Amazon. You can get it in paperback or in Kindle, and happy to say in the first couple of weeks it's been a bestseller. We have copies available at reception and also in the conference hall. So let's get started. Just recently, Paul Tudor Jones, a billionaire hedge fund manager, said he could not think of a worse financial environment for stocks or bonds, and that right now capital preservation is key. Why is he saying this? Well, stocks look like they've started a new bear market. Since January 1st, so that's just in the past 4.5 months, they're down 16.5%. That's the S&P, very broad index. If we look at what's happened with bonds, traditionally a safe haven, people opening up their Q1 investment statements are probably not very happy with their bond portfolio. 20-year treasuries are down 19%, almost an official bear market, again, since the 1st of January. Certainly not something that people expect on average. And it looks like it's the end of a 40-year bond bull market, where we've seen yields have spiked and broken out above a long-term downtrend. If you look at stock and bond combined net flows, fund flows, January and April had combined net outflows of stocks and bonds. You rarely get that kind of selling action. The previous time that we have, at least on this chart, is in March or April of 2020, when we had the pandemic hit and people panicked out of both stocks and bonds. And now we're in an environment where people are selling again both stocks and bonds. One is supposed to zig when the other zags, and that's not exactly what's happening right now, and people are selling both stocks and bonds. So the outlook for your traditional mainstream investments is not looking the most encouraging. What's led to all of this? Well, just in the last 20 years, the global money supply is up by 5 times. This is around the world. Central banks have been printing, to no end, and they're creating this kind of risky environment and certainly helping to contribute to inflation. It took a while to kick in, but the pandemic certainly helped, and we'll look a little bit at the reaction by central banks that really took it to another level. So if we look at how did we get here, the U.S. national debt recently crossed $30 trillion. The federal intake of funds is $4 trillion, and yet spending is $6 trillion. So the deficit is 50% of revenues. Just incredible numbers. In 1960, the debt to GDP ratio was 53%. By 1980, after the inflationary 70s, no less, it had fallen to 35% debt to GDP. Today, we're at nearly 130%. And this is how it looks on a graph. So you have the period of the 1970s, debt to GDP kept falling. After that, early 1980s, debt to GDP basically took off. There were just a few years of falling debt to GDP in the late 1990s. From there, it took off again, and then the financial crisis just basically triggered a massive wave higher, and we're at basically 4 times the levels we were in the 1970s. If we look at the Fed's balance sheet, it's just amazing to see that in 2000, it was below $1 trillion and rose very steadily up until 2008 when the financial crisis hit. It was at $1 trillion. Overnight, made it to $2 trillion. From there, just kept growing, eventually made it to $4 trillion. There was a small drop-off late in 2018, 2019, and then it went exponential from 4 trillion to 9 trillion and just keeps going. A little interesting factoid is that 25% of all the US dollars currently in circulation were created within just the 18 months after the pandemic hit. Just phenomenal facts that people maybe, don't realize, but need to let sink in. US debt went from 10 trillion in 2008 to 30 trillion. It tripled in just 13 years after the creation of the US in 1776. The US debt absolutely tripled in the last 13 years. Incredible numbers once again. So through all of this, why should gold and silver be struggling? Well, if you look at real rates, they've actually run up lately. That's because of the Fed increasing interest rates. Higher yields, of course, compete with silver and gold. People will run to higher yields since silver and gold don't pay any interest. But at the same time, you have national consumer, business, and student debts at all-time highs. And with higher rates, which the Fed, for now at least, seems relatively intent on raising, these very quickly become unmanageable. And so my working thesis is that the Fed's going to have to back down before very long. If you look just at one sector, mortgages, in the past year, 30-year mortgages have doubled in terms of the rates people pay. So from 2.5% to 5%, which is huge because despite 5% not on a historical basis being all that high, it certainly hurts when you're buying $500,000 homes, $1 million homes. And so the housing sector is very important to the economy. That's going to make a dent in home sales. We've started to see that a little bit already. And then it affects all of the surrounding industries, home renovations, all the materials related to renovations, things like furniture, and all of the jobs that relate to all of the related sectors around homes. If we look at different sectors of debt, U.S. consumer debt is nearly 16 trillion now. All of these have hit recently new highs. Mortgages are at new highs. Car loans is the fastest growing sector of debt. Student loans are at new highs. It just seems to be going on and on and on, but we all know it can't go on forever. The Fed's recently raising rates by 50 basis points is actually the quickest increase that they've done in as much as 22 years. It's always been quarter percent rises, and so obviously they're at least for now they're looking and talking tough. But I really don't believe that they can hold it up for very long. It's going to eventually at least really kick in and hurt the economy. It's already hurting stocks and bonds, and if you think about it, the Fed funds rate is only at around 1%. Inflation's at 8.3%. And the stock and bond markets are having fits. And if you take the 10-year Treasury that yields about 3%, you subtract inflation at 8.3, you're at a negative yield of 5.3. And so at that rate, your money loses 40% of its purchasing power in as little as 10 years. So what makes silver such a generational opportunity at this point? Well, if you look far enough back in history, it was the first true international currency. The ancient Greeks were the first to fashion silver coins that eventually became international, were traded by people of different backgrounds, and it helped to open trade in a tremendous way, in fact. Silver's proven itself to be a fantastic inflation hedge. It's been used as money for millennia, in fact, up until about 60 years ago when it was removed from our coinage. It's highly undervalued right now, and I'll show that in a few later slides. The demand is rapidly outpacing supply, and silver deficits are current and expected to continue for the next several years. So why do I say silver is a superb inflation hedge? Well, silver was priced, this is 100 years ago in 1922, silver was 68 cents for 1 ounce. And if you use the US's own CPI inflation calculator and you multiply inflation, you put the inflation onto the 68 cents, you actually end up with $11.63. So $11.63 today is the equivalent of 68 cents back in 1922. So if silver was 68 cents in 1922, it should be, if you follow inflation, it should be, if it keeps up with inflation, it should be about $11, $12 today. Well, it's actually at $21, and people are complaining that silver is going nowhere. Well, silver has actually doubled inflation over a full century. So despite its volatility, you certainly can't say it hasn't kept up with inflation. It's actually doubled inflation. If you look at mine supply for silver, let's shift gears a little bit. Mine supply peaked in 2016 and then fell actually for the following 4 years, bottomed in 2020. COVID certainly contributed to that. And 2021 it rose. This year it's expected to rise again, but the forecasts are that silver mine supply will actually peak in 2024, so just 2 years from now. And the increase is from relatively low levels, and that peak is expected not to surpass the 2016 high. So what else is happening in the silver industry? Well, that yellow bar on the left side, the left chart, is actually indicative of a decrease, a net decrease in silver reserves globally. So discovery is not enough to replace what's being mined out. And on the right side, we have a 16-year chart of M&A in the silver space. And that tiny bar that you can barely see down here is where we are in 2021 in terms of M&A in the silver space. Silver supply deficits not only existed in 2021, aren't expected for this year, but they're also expected to continue for the next several years. And yet at the same time, demand is outpacing supply in a big way. So supply in 2021 was 997 million ounces. So supply actually grew from 2020, but it grew by 4.6%, and yet demand outpaced it by nearly 5 times. Demand last year was up 19% over the previous year. And silver's been up, the demand for silver's been up in all key sectors. Overall demand was up 19%. Industrial demand alone was up 9%. Industrial represents about half of silver demand. Solar, just the single largest application for silver of any kind is solar. Solar was up 13% to 114 million ounces. It's the single largest industrial use. Electronic and electrical applications were up 19%. They combined use for 330 million ounces, and investment demand was up an incredible 36% last year. Silver ETFs continue at near record holdings. So on balance, people who buy silver ETFs on balance continue to hold and are very reluctant sellers. Silver ETFs, the silver held by silver ETFs was up nearly 6% last year to a new record, over 1 billion ounces, and that represents more than an entire year's supply of silver. So if we look more specifically at just solar, which is the single largest use for silver, between 2013 and 2021, solar demand was up 125%. Last year alone, it was up 13%. This year, it's expected to be up 12%, so another 12% over last year. So what's going to happen with supply of silver just to meet solar? So as I said, it uses 11% of all the silver supply every year, and yet today it represents, solar represents just 3% of the global electricity supply. And in many places, solar is actually the cheapest form of incremental energy. So if countries or different places around the world want to add to their energy supply, many of them will add solar because it's really actually the cheapest in many cases. The International Energy Agency forecasts that by 2030, so just 8 years from now, solar capacity will be up by 8.5 times. Now, I really don't know how that's going to happen because solar alone right now takes 114 million ounces, or 11% of the entire supply. So if you do the math, 114 million ounces, and if the requirements for silver for solar panels does not drop off dramatically, and it's been leveling off actually quite a bit, go back for a second, that orange line in the chart is the silver consumed per solar panel. So it dropped off in the first few years pretty dramatically from 2010 on to about 2014, but it's been really leveling off. So there's only so much that they can remove of silver from a solar panel for it to really work properly. So if we're at current use for solar panels, consumption for each panel, and solar ends up representing the kinds of levels that the International Energy Agency is forecasting, then solar will consume the entire silver supply as it currently stands. So I really don't see how that's absolutely going to happen. There's just no way. So that in itself should help boost silver prices considerably, and we're just not going to meet those forecasts. It's just there's no way that's doable. So let's just look at the practical side of mining silver. Right now, if you mine silver, you're making less than 50% less than what you're making mining gold. If gold is at $1,850, the all-in costs are $1,100, your margins are about 40%, which is really not bad. For silver at $2,150, the all-in costs are 18, your margin is 16%. So who's going to want to mine silver? That's just not going to help contribute to the silver supply. It's fundamentally cheap. At current prices, it's still more than 50% below its all-time nominal high. It's 90% below its inflation-adjusted all-time high. And when silver bottomed at $12 in March of 2020, that spiked down, temporary spike, that was still 3 times above its low of 2001 when it started its current secular bull run. So for me, at least, that kind of low 20 years later signals that the current silver secular bull run is not over. For people who like to follow technical charts, we certainly look like we're forming what might be a quite clear cup and handle formation. So right here, sorry about that. Right here, this is the cup, and then this part is the handle. And when the handle reaches this level, which is the previous high that it reached twice at $50, then we're in uncharted territory. On a technical basis, there is no target upside. So that's something beyond $50. I certainly think it's going to do a lot more than that once it reaches that level, and the environment will certainly be quite different at that point. As I say, I think that the Fed will have to back off. It will blink. The Fed knows it should raise rates to fight inflation. We're at 1%, inflation's at 8%. How high can the Fed really realistically raise rates in order to fight inflation before it really has to back off? It has limited ability to do that. The debts are just simply too big. They know they'll crush the economy. They know they'll crush consumers. They know they'll crush all sorts of industries. And so more than likely, the rate hikes are going to stop relatively soon. They maybe even will start to lower rates, and I think that will help start and kick off the next great silver upleg. A chart I've shown before, but I think is worth noting, is what silver did in the 1970s. That blue line at the bottom is the S&P, as well as, actually there's a red line underneath. So one's the S&P and the other's the Dow. Both of these were flat the entire decade of the 1970s. And yet gold was up 1,400% and silver was up 3,700%, more than doubling the returns of gold. So if you don't own silver yet, what are you waiting for? As I say, mainstream investments are not performing. They're going to provide you mainstream returns. Something that maybe is not a very well-known fact, but despite his public disdain for gold and precious metals in general, Buffett actually bought silver twice in his investment career. The first time was in 1966, after silver was removed from the coinage. He felt that the supply was too low versus the demand. And then in 1996, he started buying silver again in a big way, and then a few years later actually sold it and made a cool $100 million profit on that trade. So people often ask, when will silver take off? And I told them, it already took off. Silver was $4 in 2001. Silver was $15 in 2018, in 2019, in 2020. We're already still 40% above those levels. So as I say, if you don't own silver yet, what are you waiting for? The next crisis? You may not be able to get any. So if you want the entire history and the entire outlook resumed, I honestly suggest that the best way to do that is to read my book. I really laid out the case for silver. I tell you about how we've gotten to this point, the overall picture and the opportunity that you have in this metal. I talk about the history and the economics and the fundamentals. I even go into sentiment and psychology about silver and investing in it. I give you all the investment options, how you can go about building your own portfolio, as well as how you eventually will want to sell, how and when you'll eventually want to sell, because we will get to that point as well, and you want to cash in. So one more time, it's available on Amazon, paperback or Kindle, and reviews are certainly appreciated for anyone who buys the book. And if you want to follow what I'm doing, please go to silverstockinvestor.com, and thanks for listening.